This live presentation was produced in Ashland, Oregon by the Rogue Valley Metaphysical Library and Event Center. RVML relies on the support of our volunteers, members, and donors to organize and present these programs. For more information about this presentation, or to borrow, download, or purchase other recordings from our catalog, please visit our website at rvml.org.
Should have waited till the end. You might not like what I have to say. Actually, I think you'll enjoy it. Most people start out a career in talking by writing a book and then setting up a website and then finally going out on tour. And I never did figure out how to do things in the right way. And so I started talking. And this is my third talk on this subject. And I'm in the process of committing this to paper. And hopefully that'll be done within the next couple of months, and also a website. The thing is, I just decided there was no longer time to wait. And one of the things that created a sense of urgency for me, and also an overlay, and I have a lot, a major reason that I'm able to be here and talk about this subject is this book right here by Carl Johann Kalemann. And for those of you who don't have a bibliography, he wrote 2 books on the Mayan calendar, which are currently the world's bestsellers. And it was this book that really gave for me an overlay that what's happening to the physical economy are not just random events. And in fact, they're not just, they're not even usual events. This is a really big event that's occurring in particularly the Western economy. And so it was, I found out that his first book was written in 1999, The Mayan Calendar. His second book was published in November of 2004, so just a few months ago. I learned that it was going to be available back last summer, that he was writing another book, so I was waiting with bated breath, waiting for his book to come out. And so I picked it up sometime, I think it finally became available to me sometime around the beginning of the year. I read it, and I decided, okay, now it's my turn to get out there. Carl Kalemann, just as a brief introduction, and I'm going to be talking a lot more about his work. I'm going to be focusing on the first part of my presentation on the physical economy, and to give you an accurate perspective on what's going on. So, for example, you get CNN and you get me. CNN, me. And give you an accurate assessment of what you may be hearing about the physical economy, and then give you a different framework for interpreting those events. The second part, I'll be talking about how this fits into consciousness cycle patterns. And one of those consciousness cycle patterns is identified in the Mayan calendar. They're probably identified in all kinds of consciousness patterns of ancient peoples. And the other consciousness pattern that I'm going to be talking about is Hindu Yuga cycles, the cycles of consciousness of Hinduism. And then I'm also going to be talking about, well, these things are happening, and what are some things that you can do, and prepare you for that there are alternatives. And though some of this may look pretty doom and gloom and maybe even a little freaky, there's some very practical things that you can do to flow with the river of life. And then I'll also talk a little bit about the role of money in our lives, and is there a sacred way to look at the role of money in our lives? And the answer is yes, of course, because everything has a sacred role in our lives. So A little bit more about, just briefly, because he has influenced me, or he has influenced me to begin speaking, is Carl Kaliman. Carl Kaliman lives in Sweden. He is a world-renowned cancer researcher, PhD in biology. And he has lectured throughout the world on cancer, including in Beijing and MIT. So he's certainly a heavyweight in the intellectual world. He was a researcher at a senior researcher at the University of Washington for a little over a decade, and then approximately 11 years ago or so, he decided to cease that life because he became obsessed, probably, with the Mayan calendar and wanting to understand the overlay. What is that Mayan calendar really all about? In his first book, he posits that if there is intelligence guiding creation, then we must be able to see patterns. And of course there are. And in his book, he identifies patterns everywhere. And there are a couple of good ones. One of them is there are approximately 100 billion cells in our brain, and science has identified that there are probably at least 100 billion stars in our galaxy, and maybe as many as 200 billion, but certainly within a statistical measure somewhere in the range that there might be some correlation there. Scientists also guess that there are perhaps 50 billion galaxies. And so certainly close enough to 100 billion that there might be some pattern, since they're just guessing at this point as to the number of stars and also the number of galaxies. He also identifies the resonant frequencies of Earth as correlating with the human brain. And of course, one of the other Earth correlations is we have a left hemisphere of our brain, and we have a right hemisphere of our brain. And we have on planet Earth Eastern cultures and Western cultures, and they are in fact very different in their orientation. So again, a correlation there. Within the resonant frequencies that he identified, the resonant frequencies of the human brain ranging from the state of meditation to intense intellectual work very much correlate to the resonant frequencies of planet Earth, down from the crystalline iron core to the upper end of Earth's atmosphere. So he finds correlative views everywhere. So it's really very fascinating. The biggest improvement I've made to my talk is I got a pointer. So my first talk I didn't have this, so I feel like, you know, I've arrived. I've got a pointer. So I'll be able to point out all kinds of things to you. I'm going to get you right down to the bottom line quickly. The flyer you saw, or the information you saw on me, is what do Bill Gates, Warren Buffett, Stephen Roach, Chief Economist of Morgan Stanley, Bill Gross, Chief Investment Officer of PIMCO Funds, have in common with the Mayan Calendar and Hindu cosmology? So we'll start out first with the physical economist view. And we'll start out with Stephen Roach, Chief Economist with Morgan Stanley. In November of 2004, he was a guest speaker in Chicago with a group of fund managers. And at this talk, he stated that the U.S. economy has no more than a 10% chance of avoiding economic Armageddon.
When was this?
November of 2004. Very recent. By the way, something very significant happened in the physical economy this week. The bond ratings of both Ford and GM were downgraded down to junk status. And not much is made of it, of course, in the news, but it's very big. In fact, Martin Weiss of Weiss Research, one of his books is also in the bibliography, identifies that as an atomic bomb on the physical economy. And there's some $450 billion of outstanding bond debt by both GM and Ford. Junk bonds, more politely, are called high-yield bonds. High yield, low quality. So a bond run with, this is one of these rogue wave events. We can see things happening, but we don't quite know how it starts. Well, this could be the junk bond, the downgrade ratings of Ford and GM bonds could be that rogue wave event that starts creating stuff that becomes uncontrollable. So that is Stephen Roach. Bill Gross, Chief Investment Officer at PIMCO Funds. PIMCO, they're not a particularly familiar fund family, but they're a huge fund family. PIMCO has, I don't know if it's the world's biggest or the U.S. Biggest bond fund in the, but anyway, they have either the world's largest or the U.S. largest bond fund in the industry. Most of that bond fund, or much of that bond fund, is now in non-U.S. Securities. The PIMCO manages a lot of funds for pensions, and pensions often have statutory requirements that they be invested in U.S. securities, and so those pieces are still invested in U.S. securities, but as much as possible has been moved outside of U.S. funds. And then the next part, I'm going to talk about Bill Gates and Warren Buffett here in a second. But I went over this. I call this talk Sacred Economics, Collapse, and the Transformation of Consciousness. And then I quote one of Carl Kalimann's favorite quotes is, "Consciousness is primary to matter." So, can you see something that's backwards here? That if consciousness is primary to matter, then the correct title of this talk should be The Transformation of Consciousness and the Collapse, because the consciousness transformation occurs first and then the collapse follows. Consciousness is primary to matter. So, Warren and Bill's excellent adventure. Just because this is a deep subject doesn't mean we can't have fun. Several months ago, Warren and Bill, that's Warren, that's Bill. Most of you know what Bill, that's Warren. These are world's richest guy number 1, world's richest guy number 2. This guy, Bill, just became a board member of Warren's fund, and now I can't remember what the name of that fund is. Berkshire Hathaway. It trades at about $100,000 per share. They decided to short the dollar. And the funny thing about that story is that it was something that certainly couldn't be ignored by the news, but it could be made light of. And so in the Oregonian, when this event occurred, they talked about that these two fellows decided to short the dollar. And by the way, Warren Buffett also stated that he hopes he loses that bet. In the Oregonian, so they talked about that they shorted the dollar. Didn't really give a lot of explanation as to what that means. And then the last piece of their article is that, oh, and by the way, Warren and Bill really love to play bridge. And sometimes they play bridge with each other online. So that's the analysis of the shorting of the dollar, that they like to play bridge. So that's the news. What it means, of course, is that they think the dollar is going lower. So an important element of what's the U.S. dollar, and it's in some level going to get hilarious, because the dollar turns out to be nothing. And so if you're worried about your money, you're really worried about nothing. So for those of you who are Jon Stewart and The Daily Show fans like I am, I stole this headline from him, Mesopotamia. And so, so a quiz. Why are we in Iraq? And this is multiple guess. So, A, we are in Iraq because of weapons of mass destruction and to bring democracy to the Iraqi people. Okay, that's option A. Okay, we're all in favor of that one. Okay, option B falls under the heading of what's our oil doing under their sand? Oil. And option C, which may be a little bit more elusive, is to prop up the US dollar. That's it, to prop up the US dollar. And just to give you a little historical context on, and so if on the US dollar, and we're all aware that it's been dropping, and we're all aware that things are costing a lot more. And a lot more. And so what happened in, back up a little bit, why is the dollar so important? And we know it's important to us because, you get one of these little units here. It's kind of interesting. So we trade all kinds of stuff for this little piece of paper with some writing on it. And we can still buy stuff with it. I can buy lunch tomorrow. Lunch is one of my favorite things to do. Even if this dollar collapses completely, I have to figure out a new way to get lunch. So we know why this is important to us because, as far as I know, I can't go to a restaurant in Ashland and bring some Canuck bucks or bring some euros. And they're definitely, now in most parts of the world, I can take this dollar and go get lunch with it. It's quite marvelous, really, so far. So far that works. Well, the reason why the US dollar has been the world's reserve currency, or at least, or probably a big part of it, is because the US dollar has controlled all oil transactions. All oil transactions. And of course, oil drives the industrial powers. How that's been done is there are only two exchanges where oil can be bought and sold. The NYMEX, the New York Mercantile Exchange, and the London Petroleum Institute, I think. And those are two dollar-denominated markets. So the only way you can, so if you need oil, you have to hold a lot of dollars. And if you sell oil, you're going to get a lot of dollars. So what happens with those dollars is, since they're constantly being exchanged, where is the easiest place to exchange those dollars is to bring those dollars back into our economy. And that's what happens. We're up to our eyeballs, the US is up to its eyeballs in debt to foreign governments and foreign people who buy US treasuries. So in 1999, Saddam decided to exchange his huge oil reserves and trade them for euros. It was a very smart economic strategy, and we know it wasn't a very good political strategy because we know what happened to him. So it was actually in 1999 when he decided to hold his vast oil reserve money or exchange that into euros, which really makes a lot of sense for Iraq because most of Iraqi trade for basic goods is with Europe. Well, that sealed Saddam's fate. He was going to be ousted one way or the other. So it was actually in 1999 that occurred. Now you can also perhaps then understand some of the other saber rattling that's going on around the world. Venezuela, the democratically elected Hugo Chavez, there continue to be attempts to oust him, and he was even kidnapped for a while, but there was such a wellspring of public support, and he was forced to be returned within days to his presidency. Hugo Chavez also, actually he's already beginning that transition to euro reserves rather than dollar reserves. The next part of the story is Iran. Why all the saber rattling there? Iran is actually going a little bit further than Venezuela and Iraq. And Iran they're actually working on establishing a oil trade market that will be euro denominated. And the expectation is that trading system will be established by 2006, which could be a final curtain call for the US dollar as a world reserve currency. So the only one that doesn't fit into this theory is Korea, so we just won't talk about Korea. So I had this economic professor, and one of his favorite statements was that, well, if the facts do not support my conclusion, then I refuse to accept them. So I just don't even want to talk about Korea. This is a chart about vapor money. Okay? This is money supply, M3. And what this shows is the money supply growth from 1988 to 2004. And you can see that it's grown a lot. It's grown from perhaps 35,000 billion to it's now probably over the 10,000 mark. So, yes, they do just print money. And the reason that that's doable is because the US dollar is and now I forget the term. Anyway, pardon me? It's fiat currency, thank you very much. It's fiat currency. What fiat means is value by declaration. That's it. The gold standard was completely abandoned in 1971. And prior to 1971, a foreign holder of a US dollar, all I'd have to do is jump to Mexico, and I can exchange that dollar for gold. But if I was in the US, I'd not be able to exchange that dollar for gold. In 1971, that was abandoned completely, and a complete fiat currency was established in the US, and hence just uncontrolled growth of money. Where this shows up is in the credit markets. And nowhere does that show up more than in mortgages. The US is a consumer economy. We produce practically nothing. We may soon not even produce automobiles anymore. And so we are strictly a consumer economy. And the way, for particularly over the past maybe 10 years or so, that has been driven in large part by the freewheeling availability of mortgage credit. A few years ago, you could get 125% loans if your credit was good. If you had a home that was worth $100,000, you'd be able to get a $125,000 loan. So today, if you can, if you're breathing and you can create some vapor on a mirror, you can probably get a loan for a home. And so here you can see, so where all of that vapor money shows up is in the credit markets. And how that money shows up in the credit markets is through a process called fractional lending. And what fractional lending means, now I understand that the fractional lending basis is approximately somewhere between a range of 7 to 10, which means that if a bank or a financial institute holds $1, they can lend out 7 to 10 of this vapor money. One of the people who attended one of my previous lectures asked somebody at her bank about that because she couldn't wrap her mind around it that could actually be true. That they could lend out $7 or $10 when they only had $1. Where does the dollar come from, you know? And the banker, the guy she talked to said, oh, it's probably closer to 20 today. So I don't know whether that's true, but in any case. Mortgage debt is where this shows up in the physical economy. What we also see in this proliferation, and so that's what's driving our economy today. It's all debt. It's a debt-driven economy. When the spigot is turned up, we will have to stop consuming. And so where this shows up is in home. This is a graph of average homeowners' equity. Back in 1945, the average homeowner actually was pretty close to owning their home. They maybe had a debt ratio of about 15% or so, less than 15%. Whereas today, and this is only in 2003, we're probably well below 50% today, which is probably approximately where home prices will decline down to in the not too distant future, probably about 50%. What this also does is it creates, when all this money shows up, I saw a picture of a dollar bill the other day in a graph, and it was what a dollar bill would buy today as opposed to 100 years ago. And it's approximately 3 to 5 cents. That's only 100 years ago. Inflation disinformation. Don't believe anything, any statistics from the government. Back in a previous career, I used to work in research and statistics in federal jobs programs, federally funded programs. And it was during the mid to late 70s, and unemployment was very high, which is very unpopular. So that's when we just decided, well, we wouldn't count these people anymore. And so if you stop counting certain groups of people, then the unemployment rate improves and declines. So one of the big ones that was thrown out during the mid to late 70s was they decided that there were people who were too discouraged to be considered unemployed any longer. And so they knew they weren't going to find jobs. They quit looking for jobs. Their unemployment insurance ran out, so they were no longer unemployed in the official statistics. Now the big deal is the CPI, the Consumer Price Index. So when you hear the term inflation in the media, it means CPI, the Consumer Price Index. And you see here that from November 2003 to November 2004, the official rate was 3.5%. The official rate today is 4.5%. Now, I'm no genius, but I think I'm paying a lot. It's a lot more than that. I suspect it's probably in the, if my wallet is any measure, then it's probably in the teens right now. So, but here's a reflection of the PPI, the Producer Price Index. And what happens is the PPI is kind of, the PPI index tends to be a little bit slower falling into the consumer picture. But we all know gasoline, crude materials. So you can see that all of these PPI measures, or a lot of these PPI measures, are considerably greater than the CPI. And so, well, that's what you get from the government. That's the official statistics. The other interesting thing about the official statistic is that healthcare, which is one of the really one of the major reasons that Ford and GM are having such troubles today, is because their healthcare costs are really unsustainable. They're just simply unsustainable. But in the CPI, healthcare costs are about 4% of the CPI, whereas in real life they're over 10% of the average consumer's cost of living. And if you're a senior, it's a lot more than that. So, and housing isn't even measured in here. They came up with something called an imputed rental value, and I have no idea what that means. But that's the housing element in the CPI, an imputed rental value, and that's how they include housing in the CPI. So they don't include housing prices in the CPI. Going back to PIMCO a little bit, Bill Gross, he's also a very a vocal person talking about the physical economy of the United States, and really throwing up a lot of red flags. And one of the areas that he talks about is hedge funds. And it's not real important to understand hedge funds. In fact, if you get 100 economists in a room talking about hedge funds, and you probably get about 102 opinions on what they actually are. But the point is that they're rampant in derivatives portfolios. The only time in the United States that we heard about derivatives was, I think it was in 1999. There was at that time, the world's oldest bank, Barings Bank of England. It was the world's oldest bank. And a single derivatives trader brought that institution down into bankruptcy. A fellow by the name of Nick Leeson. He was operating somewhere in Southeast Asia, and he was hiding his losses. Then he went on the lam, and suddenly derivatives were big news for a short while, and then suddenly you haven't heard about them for the last 4 or 5 years. They must not exist anymore. Well, the answer is they do very much exist. Fannie Mae, Freddie Mac, for example, have huge portfolios of derivatives, and banks have huge portfolios of derivatives. And so what Bill Gross talks about is the growth of these arcane investment instruments could easily topple the economy, just a little ripple. And so it's estimated that every time the interest rates rise by 1/4 point, Fannie Mae loses maybe $4 or $5 billion because they're holding long-term portfolios of mortgages. So, which is one of the, going back a little bit to when will the mortgage markets dry up? And there's a lot of talk about trying to rein in particularly Fannie Freddie. And Fannie Freddie are the mortgage giants. When you get a loan for a home at, say, U.S. Bank, they don't hold that paper. They wrap it up, sell it, put it in an investment portfolio, and then somebody buys it. Well, Fannie Mae and Freddie Mac are the largest elements of the secondary market for mortgages. And they're so out of control that, but nobody wants to stop it either, because, again, it's debt that's driving the physical economy. So how does this all then, where does this all come to a conclusion? And the answer is, well, we don't know yet. But it's one of those in some economic circles. What's often talked about is some rogue wave occurs, a rogue wave that comes out of nowhere and creates havoc in the marketplace. And so it could very well be that the bond rating collapse of GM and Ford could actually be the fomenting element. Now, of course, again, we always think of things of, well, something happened. And so what we're going to be talking about here next is, well, something had to happen. And so we can also take a look at that. Well, we're really being led by stupid people. And that's probably true. But somebody had to be at the helm of the collapse. And what's forecast is then that very much this is a pattern that can be seen in things like the Mayan calendar.
Right.
Yes?
On your last slide, I can see the ascendancy of the figures, but I don't know what the bottom said.
Oh, yeah. I don't know how to go backwards on my computer. Okay. It was a year span. It just showed from 1990, I think, the growth of funds. They were practically non-existent in 1990. Any other questions? Yes.
You touched on some very pertinent historical references, but I realize you have limited time.
Yes.
Also, another critical thing is if you'd say a little bit about credit card debt and the fact that credit card debt can no longer be discharged through bankruptcy.
I can talk about that a little bit at the end where I talk about some, and in fact, people who come to me and ask me about bankruptcy, I tell them I'll do it now. Yes. Question?
Are you familiar with a fellow named Walter Berrien who talks about CAFRs?
No.
Comprehensive Annual Financial Reports.
No.
Basically, he alleges, and he has brought up documentation in the past, that a lot of public entities have these derivatives income that are off the public records, and that it's many more times than the costs of the public budgets in these entities. So I would recommend somebody goes through.
When you hear restatement of earnings, what that means is they lied. And even our quasi-governmental agencies, Fannie Mae, Freddie Mac, are having to restate earnings by tens of billions of dollars. So let me talk about a little bit then about the waves of nature, and really that's what we're really faced with, and you can either flow with them or you don't. You can go kicking and screaming, yet the wave of nature will always just keep going and either bury you or take it with you, or you can get a surfboard and ride it. My own a reference point to the Mayas and the calendar goes back a long time, and it was in 1972. I was in Oaxaca, and I was having beers with a fellow from Venezuela, and he said he was heading south the next day and asked me if I wanted to tag along. I was backpacking. I had my rucksack running through Mexico, and it was at Monte Alban, which was right outside of Oaxaca, a spiritual site for the Zapotecs, that he gave me a book, and the book is called Lord of the Dawn, Quetzalcoatl. And this book was published in 1971. It was written by a fellow by the name of Tony Shearer. And it's probably one of the most beautiful books I've ever read. And I I got it in 1971, read it, and when I read it, just all of Mexico came alive for me. Before I would go to ruins, and they'd be ruins. After reading this book, I went to the various archaeological sites in Mexico, and they were just alive for me. Tony Shearer is also interesting. It was in this book, it was Tony Shearer who identified the important crossing point for humanity on August 16th of 1987. It was he who identified that date in this book, Lord of the Dawn, Quetzalcoatl. And that date, of course, became known as harmonic convergence, and I think it was Jose Arguelles who coined that term and organized a worldwide meditation on that date. But anyway, so this book was really, I guess, my first association with the Mayas and also the Mayan calendar, because it was Quetzalcoatl who was supposed to be, who was the one that was supposed to have brought the Mayan calendar. And by the way, the prophecies of this book were that the world would undergo a progression of 13 heavens and 9 hells, and then in 1987 that would be the end of the last hell. So our next stopping point was Palenque. And Palenque is just an incredibly beautiful place. But the reason, so that was my first place that I visited after reading Lord of the Dawn. And this is the Temple of Inscriptions. And the reason I brought this picture here is not only because it's a pretty picture, but it is a 9-layered pyramid. And now we're going to be talking a little bit more about Karl Kalimann and how he has been able to create an understanding of what these important temples meant. And so this is the Temple of Inscriptions. A fellow by the name of Pakal, Lord Pakal, was buried there. And it was one of the few pyramids in Mexico where actually someone who was buried inside. There are other 9-layered temples. There's the Temple of the Jaguar in Tikal, and then there's also a temple in Chichen Itza, and I can't remember what that temple is called. But in any case, what Kalimann identifies is that these 9 layers represent the evolution of consciousness. And it is a progression of consciousness. And it is a increasing rapidity of consciousness. This first layer here took some 16 billion years of evolution to complete. Well, we're at the last layer of our consciousness evolution will take 260 days. So we often, and so there, it's a progression of diminished time wherein our consciousness changes.
This has been nicely presented by Ian Lungold.
Yes.
They have that here in the library. So
Okay.
some folks here may be familiar with
Okay.
magics and his work.
Okay,
So
yeah.
throw that out.
Well, all of these subjects that I'm talking about, I'm creating an overleaf. We could talk about inflation for a couple of hours. We could talk about investment markets for a couple of hours. A workshop by Kalimann could last several days on the Mayan calendar alone. So I'm giving you just really a brief smattering. And the reason I've given you a bibliography, and I know some people haven't received those, and I think we're going to try to make copies and get those to people who haven't received those yet, is that do your own research to determine whether or not this is important or valid for you. So in any case, this is one of the pyramids that is a 9-layered pyramid in Mexico, which is an important element of the Mayan calendar. And it is actually very nicely mathematically laid out. And I know you can't see this, but and by the way, there is that Kaliman interprets the end of the calendar a little bit differently than most of us are familiar with. He identifies the end of the calendar in October of 2011 rather than in December of 2012. So that is a little bit different. But I'll just point this out. This is, I don't even know, this is 16.4 billion years, I think, and 820 million years, and then 41 million years. And then as we go up, this last period takes 256 years, and then 12.8 years, and then the last phase then takes place over the period of 260 days. So if we've all made, or at least many of us have kind of heard the idea that, well, time is speeding up. And it's not time that's speeding up, it's creation that's speeding up. And that's what we're feeling. It's just creation is speeding up. Just real briefly on a tune, it's a 260-day cycle, and what this then shows is how the different, like for example, down here, the cellular phase of the creation cycles took 13, and 13 times 20 is this, just real briefly again, the measurement is 13 days, or 13, actually 7 days and 6 nights, which comes up with the magic number of 13, with 20 day signs, which are each ruled by a god. And by the way, there's somebody sitting here in the front seat who has developed this marvelous Mayan calendar. Sheus is her name, Sheusa. And if anyone, I don't know if you brought some of your calendars, but day count. If you want to, there's a harmonic to it. So if you don't like relating to the Gregorian calendar, and in fact, when Kaliman spoke in Seattle about 4 or 5 weeks ago, I pay so little attention to the Gregorian calendar that I forgot that he was showing up there. And so I was on my way to the beach, and then I go, I did one of those forehead slapping deals. And oh shoot! But I was able to catch him on a 2-hour talk the next day, after the weekend on a Monday. But in any case, so we have this 13 times 20 cycle, which is 260-day cycle, and then so the cellular level is 13 times 20 to the 7th tunes. The next mammalian cycle is 13 times 20 to the 6th. And then a reduction here, the familial cycle, 13 times 20 to the 6th, or 5th, 20 to the 4th, 20 to the 3rd, 20 to the 2nd, 20 to the 1st, and then 20 kins. So we have here a mathematical reduction that's perfect to show creation cycles. And by the way, where this all goes back to is the Big Bang. So that's a real brief framework of how the calendar is laid out in as far as its creation cycles. Because of and what we're looking at right now is the current period, the current underworld that we're in, which started out in 3115 BC. And there's some really interesting things that can be done because with the kind of calculations that can take place today is because there's enough historical evidence that we can actually look at stuff. Just going back a little bit, Kaliman, one of the things he looks at, I don't remember whether it was in his book or in one of his articles, one of the somewhat interesting ideas that floats around out there is that Jesus Christ wasn't actually born in the year 0 AD. And so he does some fairly intense research in looking at the historical record of what kind of events can we line up with this situation. And so what he finds out that, yes, he actually was probably born in 0 AD. In fact, he was probably born in March, which not too coincidentally is under the sign of Pisces. So anyways, he's a real, he has some real interesting research pieces. So anyway, this table that we're looking at is the history of money, which really traces back probably what was happening before then. Is we really don't know what was happening before then, but perhaps there wasn't any money around before then. And so, but what we have here is that during this current cycle of 3115 BC leading to 2011, again we see here these days and then interspersed with 6 nights, is we have some pieces here that show how money has been used historically. And an important element here is that until not that long ago, here we say over here in 829 we see the first paper bills in China, and then over here in 1617 the first paper bills in Sweden. So our history with paper bills is fairly recent, and before then it was gold and silver. Here is again a look at a smaller chunk of time, and we go back to the cycles of what it means to have a day and a night. And typically what occurs during the day is a framework of creation. A lot of creative activity takes place during days. And then during nights, those creations are allowed to be absorbed into our consciousness. Not too different from, for those of you who practice Hatha Yoga, you go into a pose, and it could be a very strenuous pose, and then after that you go into corpse pose for resting and allow that pose to integrate into your consciousness and into your body. So, but what's important here, or what I'm trying to point out here, is that these transition points are always accompanied by recessions or depressions. Yes?
Oh, just a couple of inconsistencies in this graph and the other one. A very significant thing after World War I, the worldwide depression of 21 and 23. And the earlier graph, if the person who was coining the first gold coins was in the Mediterranean area, they weren't gold, they were electrum, which is either a natural or a composite mixture of silver and gold.
Okay.
And I think the Chinese actually coined gold coins before that. That's another.
Okay. Well, we'll talk about the re-emerging importance of gold and silver that's occurring right now. Here we, for those of you who can't see this, back here 1775, there was an economic crisis in London and Amsterdam. This next one, England and the USA in 1819. U.S. and Europe, 1857, and then if we just go forward a ways here, 1972, we had a worldwide recession, and then what's coming up here? Well, if the pattern overlay is correct, then something is going to happen, and an economic issue is going to arise. It's about 8 o'clock right now, and this is when we're supposed to take a break. And so some of you, why don't we take a brief break, maybe 5 minutes, if people can get to the bathroom. And there are only 2 bathrooms, so I think maybe we'll go ahead and do that right now. We'll talk about Sri Yukteswar a little bit. Are we ready? Okay. This is a fellow by the name of Swami Sri Yukteswar. He is the guru of Paramahansa Yogananda. For those of you who don't know, Paramahansa Yogananda is the author of autobiography of a yogi, probably the best known Eastern philosophy book in the West. And he wrote a book called Holy Science, and this was written in 1949. And in it, he tried to reconcile the nature of Yugas, or the cycles of consciousness in Hinduism. And what he identified is that what's generally accepted is that we are either in Kali Yuga, and I'll explain that a little bit more, or we are just coming out of Kali Yuga, according to Hindu philosophy. And that's generally acknowledged, that we're somewhere in a transition point, either close to a transition point or already in a transition point. And so Sri Yukteswar wrote this book, and in this book he identified what he saw as a misunderstanding among scholars during Kali Yuga, and he literally attributes this to the denseness of Kali Yuga. And Kali Yuga, when we were kids, we used to call each other dense. So that was actually a physical description of our being. We're dense in Kali Yuga, at our most dense point. In the more traditional way of looking at yugas, which is this here, and you can't see this, but this, for example, is 864,000 years in Dvapara Yuga and 432,000 years in Kali Yuga. So what Sri Yukteswar looked at is, well, if the ages are that long, it doesn't mean anything to us anyway. And so he started looking at, well, is this actually an accurate reflection? Well, this is still the traditional way of looking at yugas, but what Sri Yukteswar looked at is that actually these cycles are much more compressed than they have traditionally been thought of. So according to Sri Yukteswar, in 1900, we came out of Kali Yuga. And just to kind of give you an understanding of what these yugas mean, this is Kali Yuga, Dvapara, Treta, and Satya Yuga, or Sat Yuga. And just to kind of give you a reflective framework of how to look, perhaps one way to look at that is, during Kali Yuga, men are ruled by men. Our lower natures take over. In Dvapara Yuga, men are ruled by representatives of God. In Treta Yuga, men are ruled by demigods. And in Satya Yuga, men are ruled by God. And so just by looking at that framework, you could understand that, well, we're going to have a very different consciousness pattern just within that thought frame. So according to Sri Yukteswar, then, we are already out of Kali Yuga now for about 100 years. And I'm going to show you some pictures a little bit later on, but in 1999, on the island of Kauai, I met a yoga master by the name of Satguru Sivaya Subramaniya Swami. And, okay, you're going to be tested on that. What was that now? Actually, the people who know him affectionately as Gurudeva. And I'm going to show you pictures of this in a little bit. I'm going to keep you the suspense high. There's a temple being built on the island of Kauai. And it is the only Hindu temple outside of India. It is a hand-carved building. Every stone is hand-carved in Bangalore, shipped to Kauai, and erected there. And as I was preparing for this talk, just going back a little bit in preparing for this talk, it was about 2 months ago that I decided, okay, I'm going to do this. And so I contacted an astrologer, and I use a Vedic astrologer, and I asked him, well, what would be an auspicious day to begin? And so he looked at my chart, contacted me a couple of days later, and he decided March 25th. And so I had about 2 weeks to prepare my first talk, and I had nothing. And so I jammed it together. I took off for the coast for a couple of weekends, and I just really focused on preparing my presentation. And as I was at the coast preparing my presentation, I had this flash that this temple that I have been so intimately familiar and associated with is due to be completed sometime after the end of this decade. And this temple, Gurudeva has always referred to it as symbolic of the merger of East and West. And we'll talk about that a little bit more. And just coincidentally, it's due to be completed sometime maybe 2011, 2012. So another interesting overlay and pattern that's it's all fitting together very, very nicely. So, so the point on all of this is that if we look at the Mayan calendar and we look at the overall overview of the patterns, what is identified then, according to Kaliman, is that we are moving away from a focus of Western domination back to balance. We're not moving to Eastern domination, we're moving back to balance. It's good news. So, and it'll have some not so fun things associated with it. When Kaliman was asked about, well, the economic patterns that he saw, and in his scholarly way, he said, well, some people won't like it. So there's definitely something going on here. According to Gurudeva, the scriptural symbolism of our movement out of Kali Yuga, and he identifies the more, Gurudeva is a very orthodox Satguru. He identifies this more traditional pattern where we go right out of Kali Yuga directly into Sat Yuga, rather than, according to Sri Yukteswar's interpretation, that we cycle back into Dvapara, then Treta, then Satya. So this gradual change, whereas Gurudeva identifies it as a very abrupt change, going right back into Satya Yuga. And what Gurudeva identified as the symbolic identification of Sat Yuga is there is the time when there is no more night on earth. And he identifies that point with the invention of the light bulb, Thomas Edison. There is no more night on earth. Everywhere you see the people circling the earth, there's always light everywhere. So that, according to Gurudeva, is the symbolic, is what his identification of moving out of Kali Yuga and into Sat Yuga. Okay, so now what's going to happen? Okay, we'll just go ahead and go to the second part of this and talk about bonds. Somebody just identified one of the biggest bondholders, where bonds are most likely are found in huge volumes are in pension funds. And somebody just came up to me and said, well, if there's one other ratings agency that downgrades the bonds of Ford and GM, then pension funds are required to liquidate those holdings. And that would be the makings of a bond collapse. And there are backroom deals being cut. And just so you understand the ratings agencies, is that companies actually pay for those ratings. Do I hear conflict of interest? One of the books that's also mentioned in my bibliography is a book by Martin Weiss. And Weiss research is the only group that, among other things, they rank the financial stability of insurance companies. And Weiss is the only company that does not charge for its service. Now, insurance companies don't have to disclose their information to Weiss, but he is the only one that doesn't charge, and he is the only one who identified the potential and actual occurrence of collapses that occurred during 1990, during the most previous junk bond collapse back in about 1992, 1993. So I've warned about bonds because bonds are thought to be safe. And I've warned about ratings for a long time, and we're seeing this big time. This is huge. The bonds, Ford and GM bonds, they're what are called market makers. And what that means is that whatever happens to the bonds of market makers can affect the entire market. It's that big. So bonds are risky right now. We'll go up here to the stock market, and I'm going to show you some graphs here also. And but basically, stocks are they're still overpriced, and I'll show you some price earnings reflections on why they're still way overpriced today. It is my opinion that the bear market that started in the year 2000 never ended. What we are in is what's called a secular bear market, or a long-term bear market. And in a long-term bull market, a secular bull market, you'll have some bear times going in. And in a secular bear market, you'll have some bull times coming in. So we've had a couple of years of a bull run within a secular bear market. So stocks are still headed down generally, but that's not to say that all sectors will see significant declines. There will definitely be some sectors that are likely to do extremely well. Well, for example, my guess is that anything related to commodities. So, for example, I think I'll talk about gold a little bit more, but gold mining companies had they had a heck of a bull run for about 2 or 3 years, and then they slowed down and they declined again. My opinion is that gold mining companies are due to make another run. And so we've seen some companies go to really high, like maybe $6 to $10 per share, that are now down to under $1 a share. And so generally the companies that are tied to some way to commodities, food, coffee, whatever, they're likely, alternate energy, those sectors are likely to continue to do well. It doesn't matter what the economy is, we're still going to want a cup of coffee. So that doesn't mean buy Starbucks. They're trading at about 84 times earnings, so forget about it. So stocks really are, in my January newsletter, I was finally right, because I've been predicting the renewal of the bear market last year. So I predicted it again, and I was finally right. You know, you predict long enough, and you're going to get some things right. It either takes a certain idiocy or a certain amount of willpower to just continue predicting things. So, but we definitely saw some very shakiness in the market. Dow declined somewhere in the neighborhood of 5 to 6% over the past quarter, and the NASDAQ about 10 to 12% during the first quarter of this year. So. Real estate, people are asking a lot of questions about that. I'll show you some real estate charts that'll blow your mind. And real estate is, there's a guy, I just read an article by him, and I don't remember his name, but he studies economic bubbles. And I don't remember his name, so I'm going to refer to him as the Bubble Boy for you Seinfeld fans. He has studied bubbles, and he has studied them with the goal of identifying where the break point hits. And what he identified, and please don't ask me to explain what this means, what he talks about when a bubble reaches 2 standard deviations beyond the mean, statistics, that's when it is due to burst and will burst. Now it can still go substantially beyond that, but that's the breaking point. The housing bubble is way beyond that, 2 standard deviations beyond the mean, past the mean. So real estate really is real estate is strictly driven by cheap mortgages. That's all. That's all. And those cheap mortgages are disappearing fast. The dollar. There may come a time when we see a dollar collapse, not unlike Argentina and not unlike the peso. And so that is certainly going to be a problem for anything that, any investment or anything that you own that has a dollar-denominated value. So that's definitely an issue. Gold and silver. We looked at the Mayan calendar, and historically, gold and silver has always played an important role in money. And so the contrarians today are saying that, and I generally agree, is that the average person's portfolio should be about, or at least 10% in gold or silver, the actual hard stuff. And you have to understand this from a framework of calamity, catastrophe. And historically, gold and silver has always been a hedge against catastrophe. So, and we're certainly in an economic situation where it could be catastrophic. Commodities. Commodities as a general guideline have been traditional hedges against inflation. And so during inflationary times like we are experiencing currently, commodities are likely to rise, and I see inflation rising a lot more. So that's just to give you a basic framework that from here on up, down, and from here on down, up. Okay, just to kind of give you another couple of, I'm going to just go over some fun charts to look at. This is a chart of credit market debt. And by the way, this is all sectors, including credit cards, and just bankruptcy. If anybody's thinking about declaring bankruptcy who's in this room, just do so now, because they've changed the rules and will make it a lot harder to get rid of all your debts through bankruptcy. So what this chart shows is that when you have this growth of credit market debt that occurred after the 20s, you see here this plunge. Now, was it the Depression that created the plunge, or was it the plunge that created the Depression of the 30s? Regardless, a depression happened. And that depression did not end until we went to war. And so now we have another fun experience. Let's see, if it didn't work the first time, let's just go ahead and do it again, and here we are again. Total credit market debt. This is a chart of the S&P 500, 1943 to 2002. And what we can see here is that if we look for a mean, it's probably around here. So what we're looking at here, this is price to earnings ratios, okay, PE ratios. And so if we look at a historical mean, this is probably it. The trading framework somewhere between 15 and 20 times earnings. Well, you can see where we still are today. Going back up, we're back up to about 30 price to earnings, which by a measure of at least historical averages, it's got about halfway to go down again. So a decline of half of 50%, assuming the market behaves somewhat rationally at some point, is quite likely. So these are just to give you some, again, some physical charts as to what's going on. Here we have, this is the fun chart about housing. This top part of the chart shows home values beginning back in the year 1900 and going to 2000 and beyond. Now, as you can see here, and this is home values adjusted for inflation and construction quality. And so what we see here is that for about 100 years, kind of right here, here's the mean. And here's where we are since 1995. Way past the mean. And what's driving that? Freewheeling mortgages. Here we have another chart of stock values. And here we see this peak again. And we're still not at this mean. These are price to earnings ratios of the S&P 500. Here we have the mean. So we're still significantly above that mean. Sake bombed. Japan's bubble. This is a chart showing what happened in Japan and what continues to happen today. Japan really is still in a very deep recession, and they never got out of it. That began in the 1990s. And what happened right before that recession, because some people will say, well, maybe commercial buildings will not go up will decline in prices. And I hear this you hear this everywhere. Well, it probably won't happen in Southeast Portland, or it probably won't happen in Ashland, or it probably won't happen in France, because the bubble that's occurring in real estate is a worldwide phenomena. It's happening. About the only country not playing is Germany. I don't know what's wrong with those people, but most Western European nations are facing the same situation of a housing bubble. So it's a global phenomena. So what happened in Japan is the peak was reached. This blue line is commercial real estate. This red line is the Nikkei index, the stock market. This line below here, I don't know what color that is residential real estate. And you see here that it all dropped. And it hasn't, it's nowhere near recovering to its height, and probably never will. So if Japan is an example, then, so what do? Debt. You know what? It's always a good idea to be out of debt. It's always a good idea. If the economy is going strong, be out of debt if you can be. If the economy is getting weak, be out of debt if you can be. That's always a good thing to do. One of the things that, for those of you whose incomes have not always allowed you to live in a style that you would like to be accustomed to, your gift is creativity. All those times when you had more month than money, I've had plenty of them. Those are the times that you were forced to be creative, and that creativity we are creators. That serves you well. So if you don't have a whole lot of money, that's probably your blessing. It's, you know what? It's if you don't have much, it's a very short drop. Somebody once asked me, gee, what was it like in the Depression? And so I did some research on that, and it turns out about 75% of people had jobs. And some of them had good jobs, well-paying jobs. So imagine having a well-paying job during a depression, where you might be able to walk into a lunch counter and pick up dinner and a piece of pie for 25 cents. And you're making pretty good money. So one of the things, because we're still going to need to eat. I still want my electricity turned on. I still want to go to yoga. I still want to do all this stuff. So maybe if you're selling real estate, it won't be such a good job. That might not be a solid job to have. So, but if you start thinking about, in an economic decline, how would my job fit into things? Kaliman poses this kind of a humorous question. What if all the computers in the world just suddenly died and all our accounts were suddenly wiped out? It'd be kind of funny. But what he talks about is, would anything really change? We'd have to do some scrambling. But like I said, I still have to go I'd have to figure out some way for somebody to make me lunch tomorrow. So that would be a high priority for me. And that would happen regardless. So how important, how secure would your job be? Are you involved in the consumer glut economy? Because those are not likely, that's not likely to be a safe place to be. Real estate, well, you saw the charts, it's toast. Excuse me, let me finish, okay? I'm running out of time. So what does look, if you want to become wealthy and you have some money right now, the most important thing to do is to keep that money safe. Now, that's a very easy thing to tell you to do, but how to do that's kind of tricky. Because at some point, after all this thing happens, there will be opportunities galore to pick up assets very, very cheaply if you have cash. The question is, what's cash? Well, we know it isn't a dollar because it turns out that the dollar is just vapor. So what the other thing to think about is, if your bank folds, could that happen? And the answer is yes. Will your cash machine work the next day? And the answer is not for a while. So you might want to have more than one bank account, and you might want to get a Weiss research report to find out whether your bank is pretty safe, because it's the big, because many of the bigger banks are going to have some problems. So, or you might want to have a bunch, a pile of 20s sitting around just in case your money machine doesn't work for a little while. So you can go get some milk and you can go get some groceries and gas. If you are interested in denominating your currency, your cash, in foreign currencies, and don't ask me which one. People ask me about the euro. Well, the euro is kinky money too. It's also fiat money, and it's not even backed by a single country. We don't know who backs it. Nobody backs it. Because if everybody backs it, nobody backs it. Now, for a while, the euro will probably replace the dollar as the world reserve currency. In fact, that's a very good likelihood. But in any case, Everbank is www.everbank.com. You can open up an account there online, denominate a CD in currencies. They even have a commodity CD that you can pick. Commodity funds are probably going to be growing. But this is about the only commodities fund that I'm familiar with, and it's a pretty good fund for those who don't want to buy pork bellies and keep them around. PIMCO. Just to kind of give you a sense of direction here on what historically things have done. This green line below here is the historical performance of bonds. This red line are stocks, and you can see the volatility. Because people sometimes think, commodities? What, pork bellies? What, corn? What am I going to do with that? Well, because it sounds weird. Well, it's a lot harder to manipulate commodity prices. And so what happens, so what you see here is that commodities really on average have not done so bad. By the way, this chart starts in 1959 and goes to 2003. So you see this commodities average, this blue line here, it's had pretty healthy performance, certainly compared to bonds and even stock. So what are we likely to, so going back a little bit to the Mayan calendar and taking a look at, well, what else is going on? Where is our consciousness leading us? And it's to balance. And it's east-west, a balance. Right and left brain, masculine, feminine, and telepathy. There was a, I read an article, and I can't remember where I read it, but some scientists had actually identified a chemical process that occurs in your body when someone's lying to you. And it's consistent. So you know when somebody's lying to you. That's all. So that's what's happening. So the next couple of photos, this is the temple in Kauai. And I'm going to just go ahead. These are just several shots of it. Now notice the beautiful dome. the golden dome. It's a 24 karat gold leaf dome.
Where is this in Hawaii?
This is actually it's being built on the 5th chakra point of Mount Waialeale, which happens to be where our consciousness is evolving into. The Vishuddha chakra of godly love, infinite love. So I'm going to talk a little bit now, just briefly, about is there a sacred role for money in our lives? And the answer is yeah, of course. There's a sacred role for everything in our lives. And so I'm leaving this picture here is because if this is a picture of your consciousness, how would your life change? How would you change your own life? And this is really, truly a picture of your consciousness. And so there's a concept in Hinduism, and it's called dharma. And dharma is duty. And it's one of the most important precepts in earthly life is duty. And there's either dharma, which means you are living a rightful life, or there's not. Adharma. And we see examples all over the place of adharmic ways of living. And certainly with money, we see adharmic ways to the misuse of money. And so in this new consciousness, money, we have to learn to use money for those who have it, have to learn to use money in a dharmic way. And that means that having a lot of money is actually a great responsibility. That big R word. It's a great responsibility. And so if you haven't had a lot of money in this life, think of that maybe as a gift too, because maybe you would have misused it just like so many other people have misused money, because it's a source of power. And so in a new consciousness, dharma is critical, and I've seen lots of interesting references to that. If you don't use money in a dharmic pattern when we're out of Kali Yuga, you're going to lose it really, really fast. So that's part of the fun too. And there's another, and briefly touch upon the principle of tithing, and it too came from Hinduism, or the Sanatana Dharma, the eternal religion. And the framework, however, is different than the way we've been used to seeing it. In the Dharmic tradition, it is all God's money. It is all God's money. God lets you keep 90%. And that's where the concept of tithing comes from. So we'll have to learn these things, I think. And so we've touched upon some physical things that, you know, if you have this intuition that you ought to sell your house, well, I think I don't think I'm giving you anything that you're not already thinking about. I think you already know this stuff. And I'm just affirming what you're already understanding, what you already know, and that you have an overleaf. So if you now have the courage to say, okay, well, then I better do something different. And so you can begin to do those things. I've just acquired this client who's selling a very expensive house in Lake Oswego, and she says she's in a hurry to do it suddenly. And I said, I don't know when it's going to happen. And I just advise her is, look, just make your plans and start moving toward those plans. We cannot predict the future. We can't tell, is it going to happen tomorrow? Is it going to happen next year? I don't know, but it's happening. So if you've got this push that says, got to do something, well, do it. Just go ahead and do it. And within that framework, don't minimize the importance of the consciousness under which you make those moves. And don't minimize the importance of elevating your consciousness, because I really truly believe that it is that our ability to elevate our consciousness that will allow us to flow gently with these changes, because these changes are going to occur. And it's a wave, and you can choose to be crushed by the wave, or you can choose to grab a surfboard and ride it. So we have a few minutes for questions, and somebody in the back has a... If anybody has a question. This one? A PIMCO Commodities Fund. Oh, Everbank, yes. Right up here. You have to speak into the microphone, I'm sorry.
What do you think about the practice of trading currencies instead of stocks?
Find some good astrologers.
It's all risky.
Well, I've known a few currency traders, and they're not chartists. You know, people will tell you, oh, we look at these charts. Well, the real currency traders look at charts, but they use a lot of other interesting esoteric tools. And currency traders, currency trading is done. My basic overview of, if you don't know what to do and you have a bunch of cash, then don't do anything. Doing nothing is good. But the best do-nothing position is in short-term treasuries. Because if treasuries collapse, then this country is gone. So if you don't know what to do, treasuries are a position of being safe until you know what you want to do.
Yes, perhaps you can comment on this. I've heard that, I don't know if this would be true in every case, but that it was worthwhile to check one's mortgage agreement, because if in the event of a extreme real estate collapse, if one's equity in one's home or property falls, if the value of the house falls below the amount of the equity, then the bank or holding company can foreclose. And this is actually supposedly, and I want to know what you know about it, written into a lot of mortgage agreements and contracts.
I've sold a lot of mortgages, and I've never seen that. But I will but thank you for bringing that up, because I will point out that talking about debt, if you have a home and you have a low equity position in it, it's a good time to get out. Rents are cheap. Yes.
Briefly, could you just go over, I missed a part about Saddam Hussein and the Iraq. What was Saddam doing? Could you briefly cover
In
that?
1999, Saddam. This gets back to why the dollar is important. It's because it's a euro. It's a petrodollar concept. And so, what in 1999 Saddam decided that he was going. He holds huge reserves because he's selling oil, and they were held in dollars. Okay. Well, he decided to begin holding his oil reserves in euros, and that's what got him invaded.
What if you own a home and you have a lot of equity in it?
Okay. Well, if I'm not married to my house, I'd sell it and go rent.
And put the cash into short-term.
If you don't know
security.
what else to do, short-term treasuries are a hanging out position. 10% gold. Again, that's a target. That's a target that you start moving towards. And by the way, that's been. I was born in Indonesia. My mom has a bag of gold jewelry, and it's not particularly beautiful jewelry, but it's high carat. It's real stuff. It's like this chain. We refer to it as Chinese gold, and that has been viewed as wealth. I have this Indian friend, he's a hotel owner, and we were talking about gold the other day, and his reflection on gold was, you never sell your gold. You know, people talk about, well, should we trade this stuff? He says, you never sell your gold. Again, that gold is your protection against catastrophe.
Yes, I was wondering along that line of the best form to purchase the gold, and what about silver? Is it better to go for the silver? Maybe it hasn't reached as far as the gold yet.
Gold will continue to rise. Silver is likely to rise faster for a while. It's probably the metal to watch. And in as far as, like for example, you can, if you want to keep it simple, you can buy coins, you can buy Krugerrands, you can buy the maple leaf, the Canadian maple leaf, the eagle. Just do not buy coins with any collectible value.
What about platinum?
It's likely to rise, but I'm not. Gold and silver are more common trading frameworks.
I'd like to have some reflection on the political positioning, perhaps we could call it, of our government vis-a-vis these changing events. It seems as though they have some idea about, the changing world situation, the end of oil, and it seems as though the policies coming from the White House have all been consistently against the public sector. It seems as though they're trying to dismantle the public wheel.
I hope at some point somebody wakes up, and that could be both good news and bad news, because when somebody decides to wake up and decides to bring our currency back to some semblance of value, real value, that means a value collapse. And that means that one day you go into your bank and they give you 30, 40 cents on the dollar, like what happened in Mexico and like in 1995 and what happened in Argentina in 2002. And that could happen because when somebody finally wakes up and says we're at the end of the line, what will happen is, well, we're going to let the little guys take it in the shorts.
What about e-bullion and e-gold online banking?
Don't know.
Don't know.
What was this resource WISE that you were talking about for checking on the financial stability of institutions?
Weiss Research, W-E-I-S-S. One of his books is listed in the bibliography. And just look up Martin Weiss. Just do a search on the internet for Martin Weiss, and you'll locate his website.
What are 3 or 4 recommendations that you have overall?
Buy some gold. Put the money that you don't know what to do with in short-term treasuries, either directly or in a fund where your fees are low, and look at some commodities.
Why 7% rather than 20 or 40%
Do more.
What about travel?
I love it.
Yeah.
I'm looking for all the friends I can overseas. Yes.
I just would like to know, do you personally feel that there's any difference between having either silver or gold in coins or in bullion? Do you think one perhaps is better than the other?
Well, in Asian countries, it's traditionally been in jewelry, because in times of catastrophe, you wear your wealth and you get out of town. So that's been the traditional. In fact, my mom has a bag of jewelry, and I know where it is, and my oldest daughter knows where it is, and her instructions to us are, when she dies, one of us has to grab the bag, because that's the family wealth. That, again, in the Eastern tradition, you never sell your wealth. So either or.
I would like to know the advantage. Say that you have a home that's really a lifestyle, something you love and you built, and it's way in in the mountains, and you just love it. Okay, so your advice: sell it.
No, no. If you love where you are and you don't have much of a mortgage or no mortgage at all, and you want to be and you are where you want to be, then just stay there and enjoy it.
Oh, okay. Okay, good.
Money isn't everything. Up front here.
Could you talk a little more about that everbank.com? Not sure.
It's no, right over here. Right over here. Everbank.
Everbank.com.
Everbank is an online bank. They don't have any little buildings on corners, and it's a bank. The CDs that you can purchase through Everbank are FDIC insured. But the difference is with Everbank is you can hold that CD in other currencies. So you could have a euro-denominated CD, and as long as it's under $100,000, the value is not going to be protected, but the protection against loss is just like any other FDIC insured. Not that FDIC insurance is all that great.
Well, and if the computers go down, how would you ever get your money?
You couldn't get it out of U.S. Bank either.
That's true.
So.
Just out of mom's bag of jewelry.
That's right.
Yeah, the e-bullion and e-currencies actually have to be investigated fairly thoroughly, because just like a bank, they can collapse. The people that are CEOs can be on the up and up. They can be very solid and strong, or somebody can go south with, yeah.
There's so much information at your fingertips today with the internet that, yes?
You have started this talk by saying, what do all these people have in common? And tell the truth, I still don't get it. What do
I'm
they have
sorry.
in common?
It's collapsing. The economy is collapsing. That's what all of these. That's what it means when Bill Gates and yes, that other guy decide to short the dollar. That means they believe the U.S. dollar is declining and maybe collapsing altogether. The other two, they're getting out of U.S. dollar denominated investments, and the other guy says, and if we look at the Mayan calendar, it too points to this transition point where we're likely to head into a depression time, or a severe economic decline. And if we look at the Hindu cycles of consciousness, it doesn't really point to anything specifically related to the economy, but it does point to a newly elevated framework of our human consciousness. And how could you change a consciousness without having that change? And I like to look at it this way. We're all fairly well-intentioned people, and let's say we all got together and we decided to create an economy. And the economy that we ended up with is 50% of humans don't get enough to eat, have practically nothing, don't have adequate shelter, adequate clothing. 30% are barely getting by. 30% of the human family is barely getting by. 20% maybe are doing okay, and within that 20%, or maybe doing fairly well, and most U.S. people are within that 20%, and within that, maybe half of 1% owns just about everything. Now, isn't that a low consciousness economy? Isn't that a consciousness? Isn't that an economy based on fear? And if we really look at this, there are really only two frequencies. There's love and there's fear. So we are focusing our attention on this economy of fear. So there's an ancient concept of shunning where you just turn your back to it. So if our consciousness is indeed in an evolving state upward, then doesn't it seem obvious that this kind of an economy cannot continue? Yes?
Where are we at in the 9 levels with the 260-day one? Where are we all at?
We're on the 8th.
8th?
Yes. The 260 days will occur sometime toward the end of this decade, or at the beginning of 2011. The 9th, the last level, yes. The final level. Yes.
Are we in the 12 years then?
Pardon?
12 years?
Yes.
Is it true that the dollar's lost 30% of its value in the last year?
Yes. Against the euro.
So what
Actually, against a lot of currencies.
What I hear you saying is that no world currency is going to be safe, basically. So all these U.S. investors that are taking all of their assets out of the U.S. to avoid a collapse in the U.S. basically are just putting off an inevitable collapse somewhere down the road too?
Well, you keep moving it around. And yes, I guess so, yes. I mean, we're living in a dollar-denominated world right now. Let's
Can
see.
you open an EverBank account without a Social Security number?
I don't know. Are we supposed to cut this off at 9 o'clock?
Yes.
No. I don't care.
If I could ask,
Oh, okay. We're supposed to cut it.
if I could ask one quick question
Okay.
that I think would be helpful for everyone here.
Yes.
Because of the changing economic system, changing economic times we're in, do you foresee the possibility of a barter system developing sometime within this decade or
Don't know.
sometime?
I think there are lots of interesting experiments going on in different areas, including here in the United States.
Okay, thank you.
By the way, is my notebook around somewhere? Please pass it up here because I've got important notes in there. If you could move it up here.
RVML Resource Center is a volunteer-operated federal 501c3 tax-exempt nonprofit organization. RVML is dedicated to providing easy access to a comprehensive collection of information on a variety of metaphysical, spiritual, and personal development subjects. RVML accepts and appreciates all donations. Material and monetary contributions are fully tax-deductible. This recording is not copyrighted and permission is granted to broadcast, exhibit, or duplicate all or part of this program for non-commercial educational purposes. This live presentation was organized and presented by the Rogue Valley Metaphysical Library and Event Center. For more information, please visit rvml.org.